Good morning, world. It's Wednesday morning, April 2, 2025, and I'm your host, Sunil Thakker, Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Liberation Day is here. US stocks soared through another shaky day of trading, with uncertainty still high about just what President Donald Trump will announce about tariffs on his Liberation Day. Wall Street gyrated in the tariffs limbo on Tuesday as investors waited to learn whether President Trump would free businesses and investors from the trade policy uncertainty that has weighed on the markets for weeks. Major stock indexes fluctuated on Tuesday as investors remained stuck. Wait and see more. The US stock market has had a rocky start to 2025 and is showing no signs of abating. After a topsy-turvy day on Wall Street dominated by investor angst ahead of the impending tariff announcements, the S&P 500 and Nasdaq Composite both closed higher on Tuesday. This attitude was reflected in the three Wall Street benchmarks on Tuesday, which swung between positive and negative territory throughout much of the day before finishing the afternoon with some decent momentum. The S&P 500 gained 21 points, or 0.38%, to 5,633 points, while the Nasdaq Composite climbed 151 points, or 0.87%, to 17,450. Meanwhile, the Dow Jones Industrial Average edged down 12 points, or 0.03%, to 41,990. Gains on the Nasdaq and the S&P 500 were fueled by rebounds in technology stocks, which have been among the most punished in the opening weeks of the year. Big tech advances were led by Tesla, which climbed 3.6% ahead of its first quarter vehicle deliveries report on Wednesday. There were also gains for other Magnificent Seven stocks, including Amazon.com, Microsoft, and Meta Platforms, which rose between 1 and 1.8%. The S&P 500, however, was also weighed down by falls in healthcare and airlines. Johnson & Johnson was the worst performer on the S&P 500, falling 7.6% and dragging the broader healthcare sector down 1.8% to the bottom of the 11 S&P sectors. A US bankruptcy judge rejected the company's $10 billion proposal through Chapter 11 to end tens of thousands of lawsuits alleging that its baby powder and other talc products caused ovarian cancer. The Dow Jones Industrial small decline had little to do with the tariffs. J&J was primarily reason to pull down the 30 stock average. Meanwhile, Delta Airlines, American Airlines, and Southwest Airlines all dropped between 2.4% and 5.9% as Jefferies analysts downgraded stocks amid concerns that economic uncertainty could disrupt both business and retail travel demand. Among single stocks, there were big gains posted by some of the newest public companies. Conservative news outlet Newsmax soared for the second straight day, jumping 208% following a more than 700% surge in its New York Stock Exchange debut on Monday. CoreWeave, which has had a more rocky start since debuting as a public company on Friday, climbed 37.3% to trade back above the IPO price of the artificial intelligence startup. Financial markets have been volatile in recent weeks as investors assess the economic fallout of US President Donald Trump's extensive tariff plans, which have sparked worries about a US economic slowdown and higher inflation. The president is expected to unveil his latest tariff plan on Wednesday afternoon at an event at the White House Rose Garden. Some of the uncertainty that has gripped markets is expected to dissipate after Trump unveils his tariff plan on Wednesday during this event in the Rose Garden, currently scheduled for 4 p.m. ETD. What Trump will announce remains unknown. There are doubts Wednesday's news will be the final word on a trade war that has kept companies and even world leaders guessing on this tariff gamut. In bond markets, the yield on the benchmark 10-year US Treasury note declined to 4.156%, its lowest level since December, from 4.245% on Monday. Gold slipped 0.1% from its Monday record or to $3,118 a troy ounce. The precious metal, which is seen as a safe haven, has rallied 19% this year. My take: while clarity on the specific tariff measures will be welcomed by investors, the overall backdrop is set to remain highly uncertain, making it difficult for markets to agree on directionality. The fact of the matter is, sentiment is washed out and positioning is still fairly light. Getting the type of clarity that investors and business leaders want is difficult for now. At the end of the day, spending a lot of time talking about tariffs is not exactly fruit bearing. But the bigger story here is that investors and businesses are looking for the economy to fire on all cylinders. For now, this means everyone is sitting tight, biding their time. Permanence is the key word, not flip flop. That's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st money@st-money.com for any further information. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it's all about money.